Okay, I believe this thing is live, even though, yeah, my computer is doing this circly thing, but it counted backwards, so I'm just assuming that I can continue to talk. So I'll just say we're 5 seconds in now. Yes. Okay. I have to get used to this. If you guys are familiar with watching other people do live videos, I would venture to guess that 19 out of 20 people are doing that on their phone. Because the phones are awesome. They have a ton of data and RAM on them anymore. But and plus, it's super handy. It's portable. You can go outside, do all that stuff. But my computer in my office, and I got my three screens in front of me. It's kind of like my security blanket. And the other thing is this is super easy because I don't have to put a phone up on a tripod anymore. This thing. But try it sometime. It's really funny. Anyway, I was talking yesterday about Tax Cuts and Jobs Act, deciding to become an enrolled agent, going through all the uh, studying and then examination process to do so. And I finally was granted the credential the day after my birthday, February 21st of last year. So I've actually held the credential for a little over a year now. And 2019 was the second full year of life under the Tax Cuts and Jobs Act. And that started was talking. So briefly, Congress and the president pushed through a major tax reform. $1.5 trillion were basically allocated to a number of different things, but a lot of people think that it gave the uber wealthy tax breaks. It did reduce the C corporation tax level to a flat 21%. The average prior to that was about 35%. So there was some major changes going on. It made a lot of changes with the middle class tax return and people that do, especially for people that are self employed. I've been talking a little bit the last couple of days. So basically, again, the reason for doing that is if you are working for yourself and you have a significant income by doing so, over 50,000 bucks a year, I'm going to say, you're basically paying an effective tax rate of over 14% on that in just Social Security and Medicare taxes before you pay a penny in income tax. So for people, a person making about 100,000, whether you're married or single, you're somewhere between 24 and 26% of your income is going to the federal government. But there's a way to reduce that dramatically, and that's kind of what I've been talking about the last couple of days. So I'm not going to go over all that again, but what I did want to talk about was a little bit of what Tax Cuts and Jobs Act did. One thing is because major corporations got that break, there is a section of Section 199 of the tax code. It used to be a domestic production adjustment. And they 199A is now the qualified business income deduction category. And basically, what that does is it gives you 20% of either the small or your taxable income as an additional deduction. Okay. Now it's complicated about how that is calculated, and basically you look at it two different ways, and the smaller of the two ways is what you actually get to take. So that's kind of the Cliff Notes version of that, and of course I had to make myself expert on that because I got a ton of questions on it, and it was new and weird. And lucky me, actually, it was in my training when I was doing my tests and everything, so I'm very familiar with it. So QBI is a big thing, and the other thing, I have a lot of realtors. I actually basically reach out to you again because I've got familiarity in the field, and I actually did it for a few months, decades ago. So um, one thing that you need to be aware of is there are some things you need to do in the qualified business income category. There's a thing called special services, and I fall under that. Real estate agents don't. Lucky you. But special services businesses, specialized service businesses, I'm sorry, SSBs, includes accountants, doctors, and lawyers. I didn't look it up before I started, so It's easy enough to look up, or I can do it for you. Happy to if you have any question. But that puts a threshold on how much you're able to write off. As a matter of fact, if I make over $400,000 in any year, I actually cannot take the qualified business income deduction anymore. So that's not super cool. But in other words, there's a lot of things to know about QBI to ensure that you're taking it. Hopefully, your tax software will calculate that for you, but you can't count on that. Remember, the taxpayer and not your software are have the final responsibility for an accurate filing. So the last thing I wanted to talk about, because I brought up realtors, was residential real estate. If you own properties, of course, you'll understand that if you rent them out, that's a nice source of income, and you have some extra write-offs. You can appreciate for you to be able to write off the qualified business income deduction for that business, you have to file a special letter. It's got safe harbor election in it. And it's very important because if you don't do that and you don't qualify for election, you can't take the qualified business income for your rental real estate business. Basically, you need to spend at least 250 hours a year on the business. And you think about that, that's only 20 hours a month. That's not hard to do, but you basically have to fill out a letter that's an affidavit, and it has to be attached to your tax return. So you just have to make sure you're touching the bases on that. So, yeah, Tax Cuts and Jobs Act 2019, awesome. Last year was a better year than 2018, and I think a lot of that was I didn't create that credential, but I have created some valuable relationships with several people who actually need enrolled agent level services, things like tax debt resolution, and that's something I'd like to talk about a little more next time I get with you. I might take Sunday off tomorrow, but I'm doing these nice short little talks. Tax debt resolution, though, just briefly, give you a little preview. If you owe over $50,000 to the Fed because you kind of forgot to do your tax filings for multiples of years, you can actually, under some circumstances, and there's a lot of success ratio with this, it's possible to reduce your tax debt to less than 10% of what you actually owe, depending on your ability to pay the debt. But you can't just take that for granted. I mean, there's you have to go through a number of forms to fill out, qualifications, this, that. And it's one of the things that I now specialize in. And I'm really super stoked to be able to do this for people and to help folks out because, as a friend of mine says, these things usually happen to good people that just got into a bad situation. Yeah, it's not because they're evil or necessarily ignorant or otherwise just amoral or whatever. You just hard. There's no remember to do it, and so yeah, but important, and that's why there's folks like me. So anyway, I just wanted to kind of talk about that a little bit. And hopefully we'll continue up to present day with the chronology of the business too. So for now, I'll leave you somewhere in the middle to the second half of 2019 and wish you all an abundantly healthy weekend. And we love you all. So for now, namaste. We'll see you soon. Bye for now.